Motilal Oswal Services Fund focuses only on India's booming service sector. But is this narrow theme a smart long-term bet or a risky move in disguise? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first go through a few basic details about it to understand about this fund first. As an NFO, the opening date is 20th May 2025 and the closing date is 3rd June 2025. Some of the key features of the fund is this is an open-ended fund type and it belongs to the equity thematic category and it follows the benchmark index of Nifty Service Sector TRI and it has an exit load of 1% for redemption within 90 days. There is no entry load, but the minimum investment amount for this fund is 500 rupees and the fund managers are Mr. Ajay Kandalwal, Mr. Atul Mehra, Mr. Balchandra Shinde and Mr. Rakesh Shet. And according to the riskometer, the risk involved in this fund is very high. And the primary investment objective of this fund is to generate long-term capital appreciation by investing in equity or equity-related instruments across market capitalization of companies which derive the majority of the income from business in the service sector of the economy. So now, as we have a basic understanding of the fund, let us move on to the analysis part of the video where we are going to take a look at the pros and cons of investing in this fund. So let's start with the pros. First, it focuses on India's growing service economy. India is becoming a service-driven economy. Think IT, financial services, telecom, healthcare, travel, etc. This fund taps directly into that long-term growth story. Second, structural tailwinds. Many service sectors are getting a boost from rising disposable income, digital adoption, and formalization. This tailwind could offer sustainable long-term returns. And number 3, quality stock picks. Motilal Oswal follows the QGLP framework, which is quality, growth, longevity, and price. So the fund typically invests in financially strong businesses with long-term potential. And number 4, concentrated yet diversified within services. While the theme is services, it includes multiple subsectors like BFSI, IT, consumer services, and healthcare, giving you a diversified play within a single thing. Number 5, this is suitable for long-term growth-oriented investors. So if you're looking for thematic equity exposure and have a long-term horizon in mind like 5+ years, this could be a strategic addition to your portfolio. Now, as we have taken a look at the pros, let's move on to the cons. So first, this is a thematic fund, which means sectoral risk. It is not a flexi cap or diversified fund because it is a fund which focuses on the service sector. So if the service sector underperforms, for instance, during a tech or BFSI slowdown, this fund could take a hit. Number 2, no exposure to manufacturing or commodities. You're missing out on sectors like industrials, energy, and manufacturing. So it's not a standalone investment. It needs to be complemented with other funds. Number 3, higher volatility in certain phases. Sectors like IT and financials can be highly sensitive to global cues and interest rate changes that can make NAV swing during certain cycles. And number 4, it requires a long-term view. So this fund is not ideal for short-term investors. As a thematic fund, the thematic bets take time to play out and short-term volatility can test your patience. Number 5, this is a relatively new fund. So as it is still in its early years, there's limited performance history. So you're betting more on the fund house's process than proven returns. So the final takeaway from this video is Motilal Oswal Services Fund is a focused thematic fund that can add value if you believe in the long-term power of India's service sector. But remember, it's best used as a satellite holding, not the core of your portfolio. So our recommendation is not to invest in newly launched funds like this. Instead, you can, as a first time investor, or even if you're a conservative investor, you can avoid investing in this fund and invest in other similar existing thematic funds with a track record of at least 7 to 10 years, so you'll be able to know what kind of risk you're getting into. Without even having any kind of portfolio or research, investing in this is risky because it's like taking a blind risk. And if you're looking for funds to add to your core portfolio, it's a big no, because this is a thematic fund, and if you're not a seasoned investor who knows how to enter and when to exit from a thematic fund, then don't invest in this fund. And if you still think you need some kind of professional guidance, you can definitely consult with a certified financial planner who will look into the suitability of investment objective, risk profile, overlap ratio, and allocation of this fund between your investment portfolio and help you take a more informed decision that can give you better outcome in the future. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.